What up, y'all? So, if you guys have been using fair value gaps and still not seeing any consistency, it's probably not the strategy, it's how you guys are using it. In this video, I'm gonna break down exactly how I use fair value gaps and how I catch clean setups in the market, step by step. Alright, y'all, so real quick, if you're new here, I mostly trade intraday using price action and liquidity concepts. And I keep everything simple and repeatable. I don't use anything complicated, no crazy indicator, just simple setups. So first, what is a fair value gap? A fair value gap is an imbalance in the market, and it happens when price moves aggressively in one direction, leaving a gap between candles. So you'll usually see this in the 3 candle structure when the middle candle pushes hard and there's a gap between the first and the third candle. That gap right there is what we call a fair value gap. So why do fair value gaps actually matter? Fair value gaps matter because the market doesn't like inefficiencies. And when price moves too fast, it often comes and rebalances that area before continuing to its direction. So instead of chasing price, we could use these fair value gaps to look for entries, also set stop losses, also telling us where price wants to go. And don't worry, y'all, I'm gonna show you guys all this in my trading view. I just wanted to explain a little bit before getting into it. Alright, y'all, so this is how I personally use fair value gaps. So this is the setup we took today. You guys can see that it was off a break and retest on a 1 minute fair value gap. And before entering this trade, I did a few things. I went into my 4-hour time frame to see my bias for the day. Keep in mind, your bias can change depending if price reverses or if we have a break of structure to the opposing side. So we went into our 1-hour time frame. You guys can see before market open, price gave us this 1 hour fair value gap right here. So right here, based on this 1 hour fair value gap, depending on what price does when we retrace back into this 1 hour fair value gap, tells us in what direction we're gonna be moving for the day. And what I mean by that, so if price comes back down and we start rejecting off this 1 hour fair value gap, we could look to take out this draw of liquidity up here. But if price decides to inverse this gap, and we're probably going to get some sort of retracement back up and then go back down to our price targets down here. So you guys can see that we started getting clear rejection on price right here. As soon as we start seeing this kind of reaction coming into this fair value gap, we can start looking for some sort of manipulation into higher. So before I go over the trade, I want to show you guys the 3 candle structure in real time. You guys can see that we have this wick right here, an aggressive move up, and then a 3rd candle right here, leaving a huge gap right here. You guys can see this is our bullish fair value gap. You guys can see that we create the gap right here. Price comes down and fills in this midpoint, and then we continue back up to our price target. I also want to give you guys an example of a bearish fair value gap. You guys can see on this bearish fair value gap right here, price breaks below the gap, comes back and fills in this midpoint, and continues back down to his bias. But this is where most traders mess up. They take every single fair value gap they see, and that's not how it works. You guys can see that price creates this 15-minute fair value gap right here, and instead of going into this midpoint and shooting back up, price inverses this 15-minute fair value gap, and we take out these lows down here. You guys want to first establish your bias and understand what direction price is going in before entering these trades. You guys have to determine if we're bullish, if we're biased. That's why we react off price and we don't try to predict. Alright, y'all, so going back to my trade for today, after we get the bias for the day and we got our first liquidity sweep down here, we want to start looking for an entry. So we want to go to our 1 minute time frame. You guys can see that price gave us this 1 minute fair value gap right here. And if we go to our 5 minute time frame, price also gave us this 5 minute fair value gap right here. So right here, we're already looking to inverse these gaps, get some sort of retracement back to the midpoint, and continue to take out these highs up here. So you guys can see after we inverse the gap right here, I'm looking for some sort of retracement back to this midpoint. You guys see we get the retracement. I entered right when price started reacting off this midpoint. You guys also have to keep in mind, if price would have inversed this 1 minute fair value gap, we're gonna have to wait a little bit longer to see if price wants to retrace back into this 5 minute fair value gap or if we want to go higher. But you guys can see that we started reacting right when we hit the midpoint. We enter right about here. We put our first take profit right at this midpoint on this 5-minute fair value gap, and our second take profit up here. So let's see what price does. Boom, we hit our first TP right here. You guys start seeing that we're getting a bit of a reaction off this midpoint. So I want to show you guys real quick that I wasn't supposed to have, oh my god, that I wasn't supposed to have this account anymore. Supposedly I had already blown it, and when I entered this trade, I accidentally entered the trade as a group instead of just entering with this account. So when I tried to take out, because I wasn't gonna risk the trade reversing down here and then me losing money for the day, especially on a Friday, because you don't want to lose on the last day of the week, ending the week off red, and then the next day you can't make it back up because markets close, and then all weekend you just have that loss in your mind. So I did exit all positions out here, because again I couldn't take out partials. But if I would have taken out partials right here, that would have been our first TP. Our second TP would have been up here, and you guys can see eventually we end up hitting our second price target. We had a crazy counter to our second TP, because price created a 15-minute fair value gap right here, and we could have rejected off that gap and continued lowered. But it did hit our second TP. I also want to show you guys that while this trade, I was also looking at the S&P 500, because during this first time I took this trade, I needed price to hold above this 5-minute fair value gap in order to give me confirmation for my other trade right here, because both of these indexes move correlated to each other. So we definitely want to be watching the S&P when we're trading the Nasdaq, or the Nasdaq when we're trading the S&P. So you guys can see that fair value gaps are super helpful if you use them in the right way. We got the reaction off the 1 hour fair value gap. We inverse this 1 minute and 5-minute fair value gap. We wait for the retracement, we enter on the midpoint, and we continue back to our bias. Alright y'all, so that's exactly how I use fair value gaps in my trading. I keep it really simple, stay patient, and I only take the best setups. Well, I try to only take the best setups. If this helped you guys, please drop a like and subscribe. I'm gonna be posting more breakdowns like this, and if you want to catch these setups in real time, I'm posting daily on my Discord. The link will be down in the bio. But real quick, before I end the video, I want to make sure that you guys are journaling your trades every day. I've always done this since I started. I haven't really talked too much about it, but I have always journaled my trades. It just helps me see what I did wrong for the day, what I did right for the day, what am I improving on, what do I need to improve on. You guys can journal your trades online. I still journal my trades in my little book. I don't know if you guys can see right there, but like for example, these were the trades for this week. This was for today and yesterday. As you can see, it's just a really great way to keep track of how I'm going and if I'm improving or not. But I hope you guys do enjoy this breakdown. Let me know what else you guys want to see in the comments below. And we'll see you next time. Let's make this money, and God bless.